Hi, this is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Friday, July 11th, 2008. U.S. stocks tumbled today with the Dow Jones Industrial hitting a two-year low as oil prices jumped to a new record and concerns over Fannie Mae and Freddie Mac swirled. The stocks of the two companies were down as much as 50% at one point as investors see them as undercapitalized and needing rescue from the government. Overnight, risk aversion in Forex markets was already in full effect as European shares plunged in European trading. The dollar-yen fell 150 pips from its session high, slipping below the pair's recent range. The euro-dollar pair rallied 170 pips, also breaking out of its range and bursting through the 1.58 level. The pair hit resistance near 1.5950 and receded as New York trading progressed, the damage already done. The dollar is now 1 cent away from its record low against the euro. Dollar weakness was pervasive as it lost across the board today on fears that the two largest mortgage backers may leave investors dry. In fundamental news, U.S. trade deficit shrank 1.2% in May to $59.8 billion. Expectations have been for the deficit to widen. Exports increased 0.9% as a lower dollar helps make American goods more competitive abroad. Imports increased 0.3%, lower than the 4.5% rate seen in April. Import prices for June were up 2.6% on the month, as higher petroleum prices continue to be a major contributor to soaring inflation. The mid-July UMich consumer confidence remained close to its 28-year low level in June. Future expectations fell while current conditions improved slightly. In Japan, household confidence dipped for the third straight month in June, posting at 32.6. That level is a new record low, but was better than forecast. Consumers are being pressured by rising inflation, with 87% of respondents reporting higher prices. The Canadian economy shed 5,000 jobs, surprising forecasts, and notching the unemployment rate to 6.2%. The news shows that slowdown in the U.S. may be spreading to the Canadian economy. The export industry, which relies heavily on the U.S., is feeling the pinch. The report may have an effect on the Bank of Canada next week as it walks a fine line between warning about rising inflation and weaker growth. In its last meeting, the bank held rates steady when expectations were for a rate cut. In other releases from Canada, the trade balance showed a better than expected surplus for May. Exports to countries other than the U.S. reached a new record, increasing 5.4%. Imports were up 3.9%. In a third release, the new housing price index remained flat for a second month. Expectations were for a slightly positive gain. On the year, prices were up 4.1%, the slowest pace in almost 6 years. It's an indication that the Canadian housing market may be feeling the same strains already underway in the U.S. and the U.K. The U.S. dollar-Canadian dollar had a whippy session as the Greenback jumped in response to the jobs report from Canada. However, after setting an intraday high at 1.0175, those gains were quickly cut down, and the Canadian dollar returned to the level it was trading at before the data. The pair will finish about 100 pips below its open for the week. The Australian-US dollar pair continued its rally for the third session. The pair traded above 0.97 for a brief time, setting a new 25-year high. With the U.S. struggling amid credit market turmoil, the Aussie will gain as it reinforces its interest rate advantage against the Greenback. From its new high, the Aussie slid down to 0.9670 as of noon Eastern Time. The fundamental docket is very heavy next week. To start next week, New Zealand will post retail sales and its consumer prices. The UK will review its producer and consumer prices. On Tuesday, Germany reviews its ZEW economic sentiment, and the US releases its PPI and retail sales. The Bank of Canada will decide on interest rates, though they are expected to hold again at 3%. And that wraps it up for the day in Forex News. Join us again next week, right here at cmsfx.com.